Hi, this is Scott Hamilton from InKnowVision. Thanks for watching this webcast. This is one of a series of short videos on captive insurance companies. You can view more of these videos by going to YouTube and searching for InKnowVision Captives, or you can go to our website, which is listed on the page here as innovision.com at the bottom of the page, and you'll be directed to more information as well as more videos. All these videos are designed to be educational and are not designed to be tax advice. Please read the disclaimer on the last page for more information about that. If you have any questions or if you'd like to explore next steps, feel free to contact us. Our phone number and email are listed on this slide, and they're also listed on the last slide for this short presentation. So today we're going to be looking at the costs of setting up and maintaining a captive insurance company. Now, we're going to be again talking about a standalone captive where your business is the primary risk being covered. There are other types of captives which have smaller premiums, cover smaller amounts of risks, and their fees are commensurately smaller as well. But today we're going to be focusing in on the standalone captive and the costs that go into that. So you've got all the costs that are listed here, which include government fees. So that's what the uh, state or the country, depending on where you're going to set up your captive, that's what the local jurisdiction charges to review your application for an insurance license and to grant the insurance license. That, of course, is an annual process each year. Once you go through the first year, it's much easier, but you've got to do a renewal application and get a new license for the following year. Uh, Probably the single largest cost in terms of fees is going to be the captive manager. Captive managers are required by every single jurisdiction that has captive insurance company legislation, and that's largely because the governments in all these jurisdictions really do not provide enough staff for the local insurance regulator to really do any oversight, to do any double checking or anything like that. So rather than charge you for that and staff up internally, what they've elected to do universally is to require that captive management companies be hired by a captive company, and the captive manager in turn must also be licensed with the government. And you could think about the captive manager as sort of a watchdog for the government. They're making sure that your capitalization is actually made to the captive, that premiums are actually collected, that the actuary has signed off on the likelihood of profitability of the company, and all the various regulatory requirements are met. And of course, the captive manager has to be aware of what all those regulations are and has to, basically certify to the authorities that you're in compliance. So, in addition to all the regulatory work that the captive manager does, the captive manager is also typically providing the underwriter to assess risks to make sure that the premiums being charged are reasonable with regard to the risks that are being covered by the captive insurance company. They're basically going to oversee getting all your entities set up. They probably don't do that entity work. They probably pay outsiders, usually law firms, to do that work. But they're going to make sure your entities are all set up and proper, and they're going to basically help you design your insurance program. In addition, there are usually actuarial fees. Two things that are involved there. One is most insurance regulators require that an actuary be involved to certify that there's a likelihood that the company has adequate capitalization and that it's likely to be in a profit situation. Most of the regulatory bodies are interested in making sure that they don't give an insurance license out to a company that's going to fail. They really want to make sure that you're going to succeed. And of course, so does everybody else in the chain here. So the actuary is going to do that. Actuary is typically also going to get paid to look at the reasonableness of premiums relative to the risk being covered and to give an opinion on that. Again, there could be legal fees. These could be typically paid by the captive manager out of their fee, or it could be a standalone legal fee. My experience is most of them are bundled in with the captive manager fees, but you could see them as a separate line item at some point. Audit fees, almost every jurisdiction requires there to be a third party, usually a CPA firm, to do an audit of your financials. And again, this is just another way that the regulator is making sure that you're operating on a legitimate basis and as a profit-making company. Every captive is a tax filing entity, so you have to pay the CPA to do the tax filing. And then the last item here is a reinsurance pool premium, and this is basically a way to spread risk of your captive into a pool of other business owners so that you qualify as a legitimate insurance company. Only this last item is variable. It's variable based on how much risk and how much premium you're insuring in your own particular captive. So that number can go up or down depending on how much premium you're paying to your captive. The other ones tend to be relatively static. They don't change, so they certainly don't change based on the amount of premium. It's really more of a manager to manager type of thing. And the truth is this is a very competitive, I don't want to say it's a commoditized world, but it's a fairly competitive world. Mostly your captive manager's fees are going to be pretty much the same no matter what company you go with. They all look on each other's website and they see what the other's fees are, and so they know what the market will bear, and they know how much work is involved in getting, and how much staff they have to have and so forth. So it's pretty standard across the board. Again, these fees are going to be significantly higher than if you're doing some sort of a sell captive or a rent a captive or a series LLC captive. Those are different animals. We're focusing in here on when you want to have your own captive insurance company that's primarily insuring the risk of your company. That's what we're looking at here. The first year of formation year, when everything's got to be put together and all the information's got to be gathered, I would say at the low end, you could see your total fees, including your reinsurance premiums, about $80,000. And at the high end, you could see them as much as $190,000. Now, this does not include your capitalization expense. There's another video on how much capital that you have to put into these captive insurance companies. So that's an amount that you put in. You just kind of leave it there until you've established enough reserves to satisfy the regulator, at which point I suppose you could take it out. But this doesn't have anything to do with capital. This is just what you're paying to providers, regulators, legal providers, and so forth in order to get you up and running. The second year, you see there's a drop. And again, these are just approximations, but you could see fees anywhere from $72,000 up to $115,000. And those are because you're not going to have such high expenses in the subsequent years. You're not going to have as many fees and upfront costs and so forth. So you're going to see a drop. And again, I've given you a range here, but mostly the captive managers are pretty competitive, so not a lot of difference there. The real difference is really whether you want to be having a captive insurance company that's owned inside the U.S. or outside. Most of our clients, once they see the difference in pricing, pretty much realize that there's no advantage to being inside the U.S., that they're going to form their captive outside the U.S. We've talked about in other videos that there's no difference in taxation. There's really no difference at all, other than usually in the cost of maintaining and formation of the captive. So again, it's something that should be discussed. It's something that should be talked about. We do have clients for various reasons with captive insurance companies that are formed inside the U.S., but I would say it's probably more of a rare thing compared to the people who form outside. So hopefully this has been helpful. If it's raised questions you'd like to talk to us, if you're thinking about using a captive and you'd like to get some more information, feel free to call us, email us. As I mentioned, there's more video material on YouTube that you can get. So feel free to dig in and contact us however it's comfortable for you. Let's start a conversation and let's see if this is something that could be a good fit for you, good fit for your business, a good way to save some money, and again, love to have the chance to talk to you. This is Scott Hamilton again from InKnowVision, and thanks for joining us.